Hi, I'm Brian Beaulieu from ITR Economics. Thank you for joining us for this edition of FedWatch. This is FedWatch, February 23rd, 2024. The Fed minutes from the January meeting were released on Wednesday, this past Wednesday, and the good news is the Fed made it pretty clear that they're done raising interest rates. I think we all sort of figured that out, at least for this cycle, they're done raising interest rates. And they're still being coy about when they're going to lower interest rates. They need to see more evidence that inflation is going to continue to abate. At least they're done making the hawkish sounds, and there's a little bit of cooing going on there. And I think they're going to get some of what they want to see over the course of the first quarter of this new year, maybe on into the second quarter too. I'm referring to a CNBC article. The list of companies that were laying people off in January was pretty impressive, from Mattel to Cisco to Levi Strauss, UPS because they lost business, of course, Hasbro. And those last three is because their sales were down from a year ago, and they're just being cautious. But the Mattels and PayPal and Nike, they're still making record profits, but they see a softening coming. They're trying to right size, as a lot of companies are in this post-COVID environment, and they want to make sure they can maintain healthy profits, which is going to be good for the stock market, granted. But it's the layoffs that I'm going to thinking are going to help the Fed with the lowering of interest rates. They wanted to see some softening in the labor market. In January, 82,307 people were laid off. And if you look at the latest 3 months through January, about 410,000 people more are unemployed than the same time 1 year ago. And that's a sign of an economy slowing down, obviously. And, layoffs tend to beget layoffs. And the Fed's going to have an opening for lower interest rates. Still looks like it'll be 2Q. That's what the commodity futures market is saying, not the commodity, but the financial futures market is saying. And we think so. I really thought it was going to be May, but latest minutes suggest maybe it's going to be June, maybe even July. Some members of the Fed are saying it could be delayed into more of the summer months, which would put it in July. There's some good news out there for you that are following the housing market. While the Fed isn't lowering their interest rates, mortgage rates are down 122 basis points over the last 3 months. So we've seen the size of square footage per single family home come down a little bit, and we're seeing mortgage rates down 1.22 percentage points. All of that is going to help with this nascent recovery in housing. I don't think it's going to be enough to worry the Fed. They know that that's a leading indicator, and they see it coming up. They're going to, I think, rationally get a little bit more latitude in terms of lowering some interest rates to help with the lagging parts of the economy. We shall see. But overall, it's balanced. It's good news for seeing interest rates come down, and from our perspective, seeing the economy improve in 2025. That's it for this edition of FedWatch. Thank you for watching us.